Good afternoon or good morning, depending on where you are joining us from, and welcome. For those who are new to our webinar and podcast series, I'm Anna Nishnanitha, the Australia's Trade Investment Commissioner to the UK and Ireland, and I'm coming to you from London. I'm delighted to be hosting today's webinar with the title of Is the UK Still a Gateway to the EU Post-Brexit Considerations? It's once again wonderful to see so many Aussie exporters online today. Firstly, I would like to take this opportunity to acknowledge the traditional owners of the lands on which our attendees are gathered today in Australia and pay my respects to their elders past and present. I extend those respects to all Aboriginal and Torres Strait Islander people who have joined us today. This webinar is part of the series where we provide Australian food and beverage exporters who are interested in exporting to the UK with industry insights and an overview of the rules and regulation to get you set up in this market. In today's session, UK food and beverage experts will provide an overview of Brexit and help inform Australian exporters to the UK and Europe of the impact these changes will have on doing business across the region. This webinar is part of the $72.7 million federally funded Agribusiness Expansion Initiative. In the second year, this initiative continues to help Australian exporters like you to enter, scale up, and diversify business across international markets. This includes a number of initiatives and events that exporters can participate in, as well as the support that's available from our business development managers across different markets who are here to help you expand internationally. We also don't do this alone, and we continue to work closely across federal and state governments. We work closely with Department of Foreign Affairs and Trade, Department for Agriculture, Water and Environment, state governments and industry bodies to improve market access for exporters. Before I get into today's content and introduce our exciting speakers, I have a few housekeeping items to tell you. Please be aware that this session has been pre-recorded and is being aired to you today. This means there will not be a live Q&A session. However, we have compiled the questions you all submitted on registration, which I will put to our speakers today. After the webinar, you will be sent a post-event email with the recording and a very short 30-second survey. Please help us by filling it in. Your input helps us know whether the information you received was valuable, and it also guides us in terms of the potential improvements and future topics we should be covering. Okay, now let's get into it. Today, we will discuss the effects of Brexit for Australian companies working in the UK and using this market as their main gateway to the EU. Since Brexit, many things have changed in a trade relationship between the UK and the EU, and we believe it's important for Australian exporters to understand these changes and how they can affect you. I'd like to introduce Tom Campbell-Smart, the Managing Director of Trade Hub, a global exporting consultancy firm. Welcome, Tom. And Martin Hiscock, the Managing Director of Brand Organic, a food and beverage agency matchmaking producers with bias. Welcome, Martin. So over to you, Tom and Martin, to take us through this session.
Thanks, Anna, and hi everyone. It's Tom Campbell-Smart here again. Just as a reminder and to pick up on what Anna said, I'm Managing Director of Trade Hub. We are a specialist UK-based FMCG agency focused on insight, compliance and access specific to the UK market. So Brexit has been, quite a considerable part of what we've done over the last few years, talking with many exporters. Many of you will have met me before from previous webinars, but just for thoroughness, we work with a number of exporters, non-governmental agencies and trade promotion organisations and help them to take the first steps into the UK market in an informed manner. In my spare time, I'm also a consultant for the International Trade Centre, advising on UK trade, and I'm pleased to be joined by my colleague and regular webinar foil, Martin Hiscock of Brand Organic. Martin, over to you.
Yes, hello, hi everyone. My name is Martin, Managing Director of Brand Organic, as Tom has kindly stated. We're an import and trade agency based in London. Throughout my career, I've operated as a buyer in both retail and distribution, onboarding dozens of different brands to the shelves, mostly across food and beverage. And I source brands directly for import and representation while offering trade consultancy to beneficiaries specific to UK trade and market access. Back to you, Tom.
Thanks. And next slide, please. So just a bit of housekeeping from our side. This webinar has been produced by myself and Martin Hiscox in our capacity as employees of independent agencies working in the UK's FMCG space. The views expressed are those of us only and based upon our independent research. The webinar and its ensuing recording has not been formally edited and doesn't necessarily reflect the views of Brand Organic, Trade Hub, or of Austrade. The contents of this webinar should not be reproduced without the written permission of the authors and Austrade. And while every effort has been made to ensure the accuracy of the material, Austrade, Brand Organic, Trade Hub, nor or the authors will be liable for any loss or damages incurred through the information provided. Next slide, please, and on to today's agenda. Okay, so this is the fourth in our series of sort of co-presented webinars with myself and Martin. And rather than focusing on individual markets, as we have done before, trends, segments within the UK sector, what we're actually going to do is look at Brexit in full technicolor and provide insight into the changing landscape of UK imports and exports and how it has impacted on trade with the EU. All of the content is designed to answer one of the most pertinent and frequently asked questions by Australian exporters, which we hear all the time. And the title of this webinar of the fact that, and the question, is the UK still a stepping stone to the EU? So to kick us off shortly, Martin will start with an overview of Brexit, because it's really important to be informed on this, because it's such a huge change in the way that we are trading and the way that we are sourcing goods and where we are sourcing goods from. So the background is needed to understand the current situation and the history, how long this has gone on for, where we are going, before handing back to me, where I am going to look at the recently changed timeline of changes. Brexit didn't just happen in one fell swoop. It's been an ongoing process for a number of years, and helping to understand where we are in that journey can help the Australian exporters in terms of their timing, etc. And yeah, I'll look at what those changes actually are, particularly at the border, which have altered the trading landscape so much. I'll then continue to look at the impact on UK-EU trade before Martin gives his insight into the impact on Australian and other non-EU exporters by examining, our professional, opinion on UK market entry. We'll then ask for a brief overview of the FTA from Anna, and they will discuss more about how it could impact on Australian exporters in both markets, before Martin and I will close with some key considerations for Australian exporters looking to access the UK market in what remains one of the most turbulent periods in the UK's economic history. This should all last around 45 minutes before Martin and I will answer a selection of questions pre-submitted as part of the registration process via Q&A session, all told around an hour. And so without further ado, I will hand over to my colleague Martin, who will begin our exploration of Brexit and what it means for the UK, the EU and Australian exporters. So next slide, please. And over to you, Martin.
Thank you, Tom. It was almost 6 years ago via a national referendum that the UK decided to leave the European Union. Next slide, please. An outcome that was somewhat of a surprise to those who voted to leave as those who voted to remain. It was an outcome with a fine margin, 52% leave to 48% remain, and with over 72% turnout. Then came the reality of working out how to actually do Brexit, which has taken many years since. Next slide, please. Brexit took place on the 31st of January 2020. The UK left the EU and became a sovereign state in its own right, a position strongly encouraged by the Leave campaign. As the process began, the UK entered into a long and last-minute process of negotiation. During this period, it was agreed the transition would allow for the UK to remain attached to the EU single market and customs union. Next slide, please. Before this occurred, the UK was part of the EU single market and customs union. It meant free movement of goods, simplified procedures, a common tax system, and free movement of people and services and vehicles. Of notable differences to other member states, the UK did maintain its currency. And since joining the European Economic Community, as it was called, in 1973, the UK was part of the union that meant access to the above. However, this was destined to change and a new working relationship formed. Next slide, please. A full 364 days into the year of negotiations, the UK struck a deal with the EU with just 2 days to go before a so-called hard Brexit was going to happen. And that would have meant a no-deal situation. It was understandably last minute in nature, but it meant certain goods remained tariff-free and without quota, although no guarantees were made on the longevity of such an arrangement. Meanwhile, the UK government had been busy working on free trade agreements outside of the EU to support the position of a more global Britain, as was a key aim of the post-Brexit world. Next slide, please. The trade deal was live by the 1st of January 2021, just 2 days after a deal was struck. The UK left the Central Market and Customs Union and continued with the majority of EU laws and regulations. At this point, the UK border took a light approach to imports from the EU and suggested a timeline of changes as which we'll explore further, have been under regular review and delay ever since. Next slide, please, and back to Tom.
Yeah, thanks, Martin. That's a very insightful and really informative way to start the session with some background on Brexit. It's fair to say it was a close-cut thing. It was voted for in 2016. It's now 2022, and the changes really aren't fully in there yet, which is what we're going to look at now. I'm now going to look at the imposed changes at the border, which have been the most highly publicized changes and really the biggest change in trade, because obviously from what was an open market, we now have a firm border. And that's really led to a lot of changes in the way we trade. It's led to changes in sourcing policies, in sourcing routes, in supply chains, with our biggest trading partner traditionally. And we'll look at just how big a trading partner the EU has been over the years, in a few slides' time. So in late 2020, just before that deal was signed, the UK government, sort of as it was locked in talks with the EU about a potential trade deal, and the pandemic was also in full swing, it must be said, they unveiled the 2025 UK border strategy as a blueprint for the UK border to become the most effective in the world. Before this point, the UK's border had only been applicable to non-EU imports. And this document right here remains freely available online if you'd like to read it, and is still being held up as the future of UK trade. It points out what trade should look like 3 years' time now. And, while it's there for the goal, it wasn't immediately available to phase in. And so the current period we are in now is one of transition at the UK border, with additional checks being introduced, particularly on EU goods entering the UK, gradually in an attempt to minimize the impact on business and allow the border to build the infrastructure required to transform from EU partner to standard third country. To put this into context, and we will see this later, well over 50% of FMCG imports were coming from the EU, completely unchecked as part of the common market, pre-Brexit, free movement of goods. Post-Brexit, all these goods require some form of check at the border, and therefore billions have been invested at the coalface at the border to ensure that the UK can handle the increased volume of checks required. So what I'm going to do over the next few slides is just give you some insight into what has been introduced and when, so that you can really understand the change that is occurring between the UK and EU. So next slide, please. So when the border changes were originally laid out as part of that deal that Martin has spoken about, they were really scheduled to take around 9 months for the UK's border to become fully operational. With continuing delays influenced by various things, global pandemics, wars, other pressures, these changes will now take around 3 years to complete, with the latest round of incoming legislation that was due to be introduced in July 22, recently delayed indefinitely, but at least until the end of 2023. So how does the border look now? Well, from the 1st of January last year, all non-EU imports became immediately subject to new border checks, which were very similar to those used by the EU. With the exception of organic products and a few others where new regulations and legislation was required. But for non-EU exporters trading with both markets, it should have felt very similar. And although obviously separate declarations were required for UK and for the EU. Where the majority of change has occurred, however, is with that direct trade with the EU. And this impacts on all looking to trade with the UK and the EU. At this same time, in January 21, an easement period was entered to allow goods to flow between the two smoothly, given that they become such long-standing trading partners. Trade with the EU was effectively still prioritised, with, as mentioned, a plan in place to gradually alter this over time. Import declarations were not required immediately. A 6-month grace period was given to submit these with the border, with Port Health. And yeah, it was really designed to gradually alter the flow of goods. The EU put an end to this from a UK to EU perspective from the 1st of April 21. So within 3 months, UK exporters were forced to comply with all EU trading requirements, and barring the detail of the Brexit agreement in terms of quotas and duties, trade with the EU was as a full non-EU exporting country. So, for a Brit exporting to the EU, things within 3 months were very similar to perhaps an Australian exporter, other than the details of the agreements in place. From the 1st of June, the first import declarations were required on EU goods coming into the UK, and these were required at time of shipment from the 1st of January this year. At the same time, this January saw full customs checks introduced on all goods entering the UK, irrespective of origin. So customs checks were required on EU and non-EU goods. This was originally planned for mid-21, but obviously with the pandemic, these things were delayed, etc., for various reasons. The final border checks from a UK perspective were set to be introduced in July 22, so in 2 months' time from point of recording, 1 year later than planned. These mainly concerned sanitary and phytosanitary goods, such as and required the introduction of export health certificates, phytosanitary certificates, physical checks on all SPS goods at border control posts, things that Australian exporters exporting to the EU and UK will be very familiar with, as well as the requirement for safety and security declarations on imports coming from the EU. And there was also the introduction of a paper-based COI for the monitoring of organic imports. None of these changes from an EU to UK perspective will now be implemented until at least the end of 2023, delayed in a bid to tackle rising inflation, to continue the flow of goods, and a touted lack of readiness at the border, although this is purely media speculation. Our government is now set to outline a new statement in the autumn of this year about these final checks. But in essence, these latest delays mean that the UK border still allows EU goods to flow more smoothly than non-EU goods from a regulatory standpoint, and will do so for some time to come. And it's only when these rules and checks are applied that all exporting nations become equivalent without the context of their FTAs taken into account. So quite a lot to get your head around, but lots of delays, a very stretched timeline of implementation from an EU to UK perspective. So next slide, please. So what we're going to do now is look on the impact this has had on UK and EU trade, looking at some of the latest statistics. Let's take a quick look. Next slide, please. So let's look at the UK trade with the EU from 1999 to 2020. Nice graph here from the Office of National Statistics. But most global traders won't be shocked to see that the UK trade with the EU was rising for 2 decades prior to any Brexit talk, with the removal of all barriers and a common market central to this. This growth continued long after the announcement of Brexit in 2016, all the way into 2019, at which point discussions began over Brexit and businesses really started to take notice. In 2020, trade fell away considerably as traders began to shift supply chains and the pandemic occurred. And this was sort of a dual effect. And much service provision also fell away. This slide takes into account goods and services, and so can be taken into context. So what about more recent history? Next slide, please. So let's look at trading goods. And we've got imports and exports here of UK imports from the EU from January 2018 to September 21. It's fair to say it's not just Brexit that's impacted on trade. The pandemic has also had a big impact, as seen by the graph. Trade was beginning to fall pre-pandemic, as I already said, as businesses prepared for Brexit changes. But what was to follow was obviously unprecedented, not just for us, but for everyone globally. The first lockdown had a big impact on imports in particular, caused by different parts of the EU going into lockdown at different times and different availabilities of goods, etc. But things did begin to recover and recover pretty quickly, especially on imports where, the UK is a heavily importing nation. We have a trade deficit on almost every single HS code except for Scotch whisky. So, we are a big importing nation, and so our imports recovered quickly. It was clear this transition period with its light touch regulations in the border, this all helped to get those imports back up. But you can see that there's a much bigger sort of dip and recovery in the imports than there is on the exports. And then, we got to December 2020 and the start of Brexit proper, and you can see that there was a greater impact on imports and exports, than anyone, I think, imagined as people had stockpiled before in build up to these announcements coming in, and it's fair to say, business did start to recover, but as you can see, very, very slowly. There has been lasting impact on UK to EU trade. Recent research from the LSE Centre for Economic Performance found UK imports from the EU fell by 25% relative to those from elsewhere last year alone. This is not expected to recover. Particularly, there's going to be a long-term decline being predicted in trade with the EU, both in terms of import and export, but particularly import. It's also clear that Brexit had a greater impact on imports to the UK than exports out, as trade with the UK becomes increasingly more cumbersome for those in the EU. Next slide, please. Let's look at some additional trends. So there's some really interesting things when you pick apart the trade with the EU and UK and how it's changing. While the value of exports and imports looks to have somewhat recovered from those previous graphs, the overall numbers actually hide some key facts. The number of trading relationships with the EU has fallen dramatically in the past 18 months, indicating less partnerships, less trade, less actual trading transactions, but with higher value. As in any time of economic strife, consolidation tends to occur. Larger parties, more able to incur and absorb costs, can profit in such scenarios. And it's fair to say people are now trying to send bigger shipments less often. Smaller businesses have been hit hard, understandably, and administrative and regulatory costs of trade with the EU, making it very difficult for many. And this, combined with previous points, all points to this negative long-term impact on trade with the EU in both directions. Given the UK, as I've already said, is in trade deficit in almost all FMCG categories, this could provide an opportunity for non-EU exporters looking to fill gaps where EU products no longer have such a competitive edge. Yes, the border is still slightly in favour, but non-EU imports are beginning to become a level playing field with the EU, which they haven't been for so many times. So let's have a quick look at EU imports next, before I hand back to Martin. So non-EU imports, unsurprisingly, are beginning to rise and have been rising for some time. And you can see on that graph at the end of the Brexit transition period, EU imports have begun to quickly rise. And while EU imports have recovered, they haven't recovered, to pre-pandemic, where they outrivaled non-EU imports. So in essence, because the procedure is becoming identical, there is more impact on EU imports into the UK. The trading relationship with non-EU exporters remains the same. There are some important points to identify on this graph. Considerable stockpiling occurred on EU goods prior to the introduction of border controls, which you can see that huge growth in imports from the EU in May in 2020. This was unprecedented. There was huge strain on warehousing, but it hasn't been repeated because border checks have now come in some form, although not fully. And there was, at the end of 2021, a change in the way that reporting occurred with the EU, which shows that little spike towards the end of the graph. But in essence, all of this points to, good news long-term for exporters from outside of the EU, particularly those with a potential benefit of an FTA. As non-EU goods become more favorable, or at least operate on a more level playing field to those from the EU. So with that, I'll hand back to my colleague Martin, who will take a look at what impact these changed trading relationships could have on any potential market entry. So Martin, over to you.
Thank you, Tom. So yes, we're going to look at that impact on market entry. So next slide. The UK and EU are now separate entities and should be classed as separate targets in their own right. Although the UK continued to follow EU legislation from January 2021, mostly because there wasn't time to do anything but adopt the EU legislation, it is free to introduce its own rules and regulations without EU legislation above it. Expect changes in legislation to occur, and depending on the category of product or service you provide, changes may have already happened or may have been planned to happen and have been pushed back. As Tom was covering there, we have had some very last minute delays coming in, which, as soon as last week, in fact, affecting how things are happening at the border. A common question is the UK still a gateway to the EU? And that is a moving question. While there is scope for the UK to continue as a bridge to the EU, The terms of crossing that bridge are changing, so consider any step into the EU as possible, but with the realities of crossing into a new market and the potential compliance, labelling, tax and duty implications, amongst other things, that may bring. Next slide, please. Consider that when comparing the UK and EU, you're taking on two very different markets that should never be considered the same, despite being quite close neighbours. The EU is an incredibly diverse and sophisticated market to enter. There will be some markets within the EU that favour your category of products or service, and you're going to have to look at the data, have an understanding of what's happening on the ground, and do your research. Notably, any free trade agreement with the UK will probably not apply with the EU member state that you're looking at. So you may have to consider potential tariffs and duty on re-export. So that's if you import into the UK and then wish to export out to the European Union. Each country will require its own expert guidance, from labelling, language, for example, through to market activation. Distributors work in very different ways, depending on the market that you're taking on. Retailers operate differently. There are lots of things to consider that will be different. It's best to prioritize your market according to the demands of that market, the trends, market potential, and importantly, your capacity to invest, be it in time or indeed capital resource. Our advice, as always, is to take on one market, do it well, before considering targeting another. Next slide, please. So as an Australian exporter setting up a UK entity or finding a British partner is no longer a guarantee of easy access to the EU. It's a more complicated matter and will take further research. It is possible, just with more steps to consider and a higher risk of business critical change. You're taking on different markets, so a one-size-fits-all approach does carry risk. With so much disruption in the past few years, Brexit, COVID, global trade, and now the situation in Ukraine, supply chains are under considerable stress and unpredictable change. But with FTAs on the table, arguably opportunity awaits exporters who are ready to move as disruption and unpredictability begins to ease. And there is some stark changes happening right now in terms of the number of EU brands that may be exiting the UK as border controls come in and new steps in the supply chain become a reality. So it's a moving situation. It's very live. It's one that you should be looking at quite closely with an in-market partner and people on the ground in the UK who can tell you exactly what is happening. It may be a case that as brands fall out of the market, gaps on shelves do appear, and there's an opportunity for you to capitalize upon. But this is an evolving story and will be for many years ahead, in our opinion. So next, we're looking further into the UK-Australia FTA, and we're going to hand back to Anna from Austrade, who's going to give us some insight on that. So next slide, please, and over to Anna.
Thanks very much, Martin. We'll go to next slide. And the reason why we wanted to have quickly run through these is because we also commonly get a question from exporters, will the Australia-UK FTA make it easier for me to trade with EU? And the simple answer is no. What the Australia-UK FTA will do is that we'll create more opportunities and make it more competitive and easier for you to trade with the UK. The Australia-EU FTA, which is currently being negotiated, will impact our market access to the EU and will hopefully improve market access to the EU. So just to quickly recap on the Australia-UK Free Trade Agreement, it was signed in December 2021, on the 17th December, and it's currently going through a domestic ratification process in both Australia and the UK, and we're hoping that will enter force later this year. It will result in elimination of 99% of tariffs on Australian goods entering the UK market, and also in further elimination of tariffs and transitional quotas over the course of the next 5 to 12 years. So it will significantly improve market access and reduce the costs of trading with the UK. It will also result in a reduction in the red tape, by making it simpler for traders to prove the originating status of their goods, faster customs clearance timeframes, and to transparent trade investment rules, so savings can be made on administrative costs when trading with the UK. So all of those benefits will benefit exporters, and they will make it easier to trade with the UK. And as Martin and Tom just pointed out, there might be new opportunities created in the market because the trade between the UK and EU is becoming a bit more complex, where there are gaps that are being created, and it will certainly, with the Australia-UK FTA, will certainly make Australian products more competitive in this market and provide opportunities for us to compete with products from European countries, but also other countries across the world. As I mentioned, what it will not do, it will not impact how you trade with the EU. However, as Martin pointed out, while the two markets are very different and you do need to think about the certification requirements and market access and customs clearance into the EU, I would say that if you've succeeded in the UK, it definitely puts you in a good place and gives you a really good insight in terms of what to expect when you are planning to trade with the EU and things that you need to consider and think of when you're planning expanding into the EU market. So look, they're the key things that I wanted to highlight in terms of the free trade agreements, and I will now hand back over to Tom and Martin to talk about key considerations for exporters.
Yeah, thanks for that information, Anna. And it's really exciting for Australian exporters looking to access the UK market. The commodity code is obviously key to a lot of that, and I'm sure exporters are being obviously well informed in this regard. So off the back of that, Martin and I are going to look at just some general considerations as our final sort of part of this webinar for Australian exporters in a post-Brexit world, and build on what Anna said and what Martin said and what I've said before. So next slide, please. So some general considerations. We've already seen that, in all honesty, that the UK is no longer as much of a gateway to the EU as it used to be. Anna has mentioned that a trade agreement is in place to assist with trade with the UK, but not currently in place to trade with the EU. So while both markets remain desirable, it's clear to really examine the potential of whether one is more desirable than the other. Both markets work very differently, as Martin's already alluded to, and this is only likely to be amplified, in our professional opinion, over time as they become further apart as a result of Brexit. And therefore, your capacity to access both is also a consideration, as is the timing as FTA impacts come into play alongside these changes at the border. Finding a route to market in both can be time consuming, and depending on the size of your organization means that you can spread yourself thin. There is different ways of doing business in certain countries within the EU member states. And this is obviously an individual business consideration, but as experienced professionals in the market, we've seen people spreading themselves thin or trying to enter too many markets at once occur many times. And this was a problem pre-Brexit. So post or in the middle of and leading to post-Brexit, this is definitely a consideration. There is also the consideration that changes can actually be made for both markets now to prepare, packaging on goods, which we'll look at on the next slide. But you might need specialist assistance in both markets to get out in front of certain changes and ensure compliance potentially from day one. Sorry, can we go back to the previous slide, please? Martin, have you got anything else to add?
Yeah, you've got to keep an eye on those currency fluctuations. We've had quite a number of quite stark differences occur between GBP, British pound, and the euro. Notably, the Brexit negotiations, we almost saw parity between the pound and the euro, which bounced back once a deal had been struck. But it does show you how stark things were affecting the rate of exchange. So if you're looking to export to the UK and then sell into the EU, you're looking at that rate of exchange specific to the Australian dollar, and then any difference then between the UK and the EU. So it is something you need to keep an eye on. Bear in mind that changes happen quickly sometimes, and we've seen quite sudden changes based upon the situation in Ukraine recently. Now, if you're sending goods from afar, notably from Australia, you could have currency changes while goods are on the water that could affect the competitiveness of your products. Indeed, somebody may agree to buy something at a price that is no longer achievable, in terms of meeting their margins and so on. So it is an important thing to look at and consider. Look at the swings in either direction. And plan that in, have a plan, have some kind of margin there to allow for those changes, because you don't want to be shipping goods and then realize that actually you're either not competitive anymore or there's just no margin there anymore, and it's kind of been a wasted exercise to some degree. At worse, you're losing money, of course. So quite important things to keep an eye on. Also consider where you're landing the goods, and if you are landing in the EU and hoping to bring it over to the UK, it's tricky to keep that not landing in the EU and then coming under EU law and legislation, and suddenly you may find that you're not able to export in certain ways. So if you import organic or something, it can change. There's a lot of things specific to your products. You need to do your research. You need to look at every certification and claim. You need to look at both sides of the channel. As it is, and make sure that you're ticking boxes on both sides. And as I was referring to earlier, expect more changes to come, which really does mean you need people on the ground to keep an eye on that, and make sure that what you're selling is still compliant and legal as well. So quite a lot to consider, and I think really keeping an eye on this with somebody in market that can advise you clearly and be ahead of the curve is very important.
Yeah, that's a really good point, Martin. And it's interesting that you picked up on health claims, because obviously the EU has always been tremendously regulated on health claims on products, and they've always had a register. And the UK does now have its own health claim register, which, while currently, as far as I'm aware, is almost identical, they are set to change. So there may be in future, in 2 to 3, 4, 5 years time, health claims that are allowed in the UK but not allowed in the EU, and vice versa. And these are things that exporters need to be aware of, especially with retail goods, et cetera, et cetera. So yeah, and I will just to add to your point, I mean, shipping, we're, both of us are in the market talking to buyers and talking to importers. Shipping is a huge, if not the number one consideration right now. And so when we talk about timing and markets being appealing, having, I know this goes more into market entry than it does into talking about Brexit, but all of the global, economic picture is all related, and the shipping crisis is definitely of interest to UK buyers at the moment. So looking at what we were talking about then, little changes you can make for both markets. Can I have next slide, please? So I wanted to give a couple of examples of multilingual packaging that is compliant with both the UK and the EU. Currently, our labelling rules, etc., are the same, and it's really common on UK shelves and EU shelves to see labels that are in multiple languages that apply to both formats. Now, as we mentioned, there's no guarantee that it'll stay this way forever, but if you are building UK-specific labelling, why not get it ready for the EU as well? If these are things that you can do, even if you're not exporting to the EU, it's not going to hurt in terms of your UK market access. So, your import partners in both markets, UK and EU, will be able to assist with things you can do here. But there are definitely strong considerations for those looking to make an impact in both markets eventually. You might start with the UK, but you can make changes for the EU, immediately. And this is a can of Pringles here, and another, I think it's on a pan of French fries. It's really common to see these retail ready multilingual packaging things, and consumers in both markets are completely familiar with them. So that really brings us to an end of our presentation, and we thank you for your time. I think it's safe to say that the UK isn't as much of a gateway to the EU as it used to be, and it's likely to become less so over time if the numbers and experts are to be listened to. Therefore, increasingly, each market requires its own research and its own plan and its own strategy, as you would with any other global market. It is fair to say, however, that brand Australia is becoming increasingly relevant in the UK, and the FTA was widely well received by UK consumers, which is also an interesting point. But as a final point, our border does still remain skewed, and it is still easier to move goods into the UK from the EU than it is from outside of the EU. This, at the moment, may be addressed by any competitive advantage provided by the FTA, but it might not be felt as strongly as it could be initially until the government really does phase in this full border implementation. So thank you for listening. We're going to go over to the Q&A. I'm going to hand back to Anna, and yeah, Anna, over to you.
Thanks very much, Tom and Martin. Super insightful. And like you said, not as much of a gateway anymore. However, I think it's creating new opportunities and making Australian products a bit more competitive. So, there's advantages and disadvantages on both sides there for companies to consider. So, look, as Tom mentioned, we are going to go to Q&A now. Thank you for everyone listening in who submitted their questions for us to answer. So the first question is, how are recent events affecting the cost of living in the UK, and how is this impacting consumer behaviour?
Martin, do you want to take that one, or shall I?
Sure. I think it's fair to say, like in many countries around the world, the UK is becoming embroiled in a cost of living crisis. And as a country so highly dependent on imports, it's becoming ever so stark here. Cost of goods are rising, energy and fuel costs are skyrocketing, and inflation is at an all-time high. While many public finances and the growth options available, such as public sector pay and income tax thresholds, are being frozen. So, and often, if you look at the entire process there, it can be the packaging that's going up. If you're a brewery, the cost of glass, the cost of gas, the cost of everything that goes into it is going up in price. So everybody's kind of in the same boat here in terms of the cost of goods and the cost of services and everything going up. So it's kind of everyone's expecting price rises from a lot of brands. How much of this is due to Brexit remains unclear, given the multiple extreme influences on this that's happening in the world. However, it's certainly playing a part, and it's part given the government's recent announcement to delay border controls is because of this being considered an act of self-harm now for us to be leaving this open border policy that we had enjoyed. Just because they couldn't really predict what was going to happen. And now we are having such stark increases in the cost of living as well. In terms of consumer behavior, major impacts are yet to play out, but luxury items are already feeling the pinch. Budget shopping has become increasingly prevalent. But the cost of an average basket of goods, groceries, has gone up quite sharply. Obviously, for the lower value items where there's not that much room in margin to give away, costs are going up. We're seeing supermarkets really champion holding prices down, more loss leaders coming in. So there's a real fight going on here for the lower end of the grocery market. Many Brits saved considerably through the lockdown and used that money wisely, with record mortgage overpayments seen in 2021. So all in all, expect a sensible approach from consumers who are loath to waste their saved pots of money on non-essential items, and people just generally watching what they spend now more than ever.
Yeah, absolutely. So is now a sensible time to be entering the UK market?
I mean, is there ever a sensible time to enter a new market? I think it's, at some point you have to take the plunge. There is the main barriers to entry from UK buyers currently, as we sort of mentioned, are Brexit and shipping issues. The shipping crisis is problematic, but it's problematic to everyone. It's not a specific UK thing. And anyway, these concerns can be eased, it is likely to appeal to buyers here. Setting up new supply routes, potentially on the other side of the world, it's fair to say is not high on the list of priorities for many buyers here, but that doesn't mean to say that they will not do it. Ultimately, as Martin said earlier, your actual goods will dictate whether now is a sensible time, in our opinion. Brexit is causing gaps, as are other global issues, and this provides a potential for high reward, obviously alongside the risk factor that is always there. When and where these gaps and opportunities occur is I mean, we don't have all day, but price remains key, particularly at a time when consumers are counting their pennies, and understanding whether you are actually economically competitive both now and maybe in a year's time to the best of your ability is more important now than ever. So yes, potentially now is the right time to. I mean, it's a difficult question to answer. It's very commodity and very product focused. To answer that question, but with all the changes that are going on, that always provides opportunity, but it also provides obviously greater risk.
Yeah, no, absolutely. I think, as you mentioned, price and distance are always sort of playing a little bit against Australia, but I would say we're seeing a lot of appetite from various buying groups looking at new sources of products. So from that perspective, it's definitely the time now to put our best foot forward, but there are challenges and constraints that we need to consider around the distance and the price. So how do I know which products are in demand in each market?
Well, trends in the UK and the EU do remain similar, but of course not identical. For instance, the health and wellness trend continues to sweep through Europe and the UK, with functional, low calorie, and natural all big trends, alongside the vegan and plant-based movements. Larger trends are often mirrored, albeit at slightly different paces. The UK is really pushing forward with plant-based and vegan. They expect a quarter of Brits to be following those type of diets by 2025. So quite big trends there. But there are however many differences, and some of these are often cultural. For example, glass use for beverages is much higher in the EU, where glass recycling schemes are more prevalent. Whereas in the UK, cans remain very popular, as does carbonated drinks. In terms of understanding demand, this is simply down to market research. In the UK's food and drink scene, supermarkets are often slightly behind trends. They like to play safe, and a movement into own brand often shows they believe a market is beginning to mature. However, we're seeing a lot of the big multiples adopt more innovation, having specific schemes and specific areas of the supermarket that are all about new brands, new trends, and we're seeing that across the board now. So it's not to say that they're not looking, they really are, but they give an opportunity for brands to test the shelves, I think is fair to say. And in a way that's validating a full listing and the supermarket really getting behind a trend or particular innovation. So it's good to look at the supermarket, see what's on the shelf. If you're able to come here and look at the stores, that's useful. But of course, they're also dominant in e-commerce. You can tap into any of the major supermarkets, look at products specific to your category, and see what's happening, see what's on the shelves, and see what the messaging is, and ultimately get an idea of what's working and what's not in a particular category of product.
Yeah, great. Thank you. So do EU exporters still have an advantage over non-EU exporters to the UK?
Well, I mean, again, that's a big question, but in terms of, actually moving goods, the physical movement of goods, yes, they do. Until the UK fully implements all its border checks, EU goods are subject to far less regulations, particularly in some areas such as meat and dairy, where there's less certification required. If it's sanitary or phytosanitary, yes, until we implement all of our border checks, EU exporters have an advantage in terms of goods movement. Now, in terms of, buyer preference, as you've said already, Anna, in terms of, what the appetite is to continue sourcing from the EU. I mean, you've already seen from the graphs that I introduced that the EU trade is falling. It is falling, and it is becoming, the playing field is beginning to level out already, as long-term effects are being felt in terms of EU trade. So it's a complex question. I'd say, like I said, simple answer is, from a goods movement, yes. From a buyer perspective, I'm not so sure anymore.
Yeah, thank you. Okay, final question. Will the FTA give Australian exporters a competitive advantage? So look, I mean, I'm happy to kick it off. Look, in short, I think so, absolutely. The removal of tariffs, the introduction of increased quotas, as well as, improved rules to simplify things and improve the timeframes will make it easier for Australian products to enter the market, and it will make them more competitive. And then, as Tom was just talking about, some of the sort of gaps that are being created and the EU trade falling, it means that buyers are looking to other countries and other sources of products. So yes, from our perspective, it will. Keen to hear your views on this as well, Tom and Martin.
I think it absolutely can do, and it's such a global question. to raise, really, when you consider, and very specific to the category of product. So yeah, you're comparing to other international exporters targeting the UK. It can be a real step up in your favour in terms of like the less duty that's applied to that import, and something that can help offset the cost of freight increases that we're seeing that are affecting everybody in the world. So I think from a competitive standpoint, it's very useful. And it's going to help existing and new exporters in approaching the UK. So, but it's important to understand how the UK is sourcing currently, and looking at your category, looking at the data that's available, something that we do frequently for different exporters, and seeing what the competitive advantages are compared to other nations in the world that are targeting the UK and what FTA they may have. So it's quite a big question, but certainly a step in the right direction. And as we're seeing, opportunity is afoot potentially in the UK as we're going through such serious changes in the way that we source and the products that we buy.
Yeah, Martin, can I add to that? Because actually there's a few intangibles actually that, you've talked there about actually, whether it gives an economic competitive, but actually, we touched on, the brand Australia thing earlier. And one of the really nice things that the FTA has done is highlight Australia. It's been really well publicized in the news. The UK consumer consensus that's been, polled and asked about is overwhelmingly positive, that Brits consumers have an appetite for Australian produce. And that therefore not only potentially gives a competitive advantage financially, the FTA, but actually it gives one from a PR perspective as well. It highlights Australian produce. It puts Australian items in the eyes of buyers, in the eyes of consumers. And actually, I for instance, I walked into Harrods the other day, and there is a whole shelf of Australian goods that I'd never seen there before. Not that I'm a regular Harrods shopper, but it's just interesting to see, Australian goods finding their way onto UK shelves, perhaps in categories that they never used to be, recognized for. So Australian meat, Australian dairy, like this has always been a thing, but, to see Australian condiments and sauces is definitely a change. And that, I think perhaps that is actually, there are some wider intangibles that are part of that process, as well as, just the economic and commercial effects of the FTA.
That's a really good point. It's a really good point. I think it put Australia back on the map, and it opened up conversations about Australian products again. So it's been a really useful promotional tool. Absolutely, couldn't agree more. So look, we don't have any more questions from the audience. I guess I have one question. I'm interested in your views. Is it easier to enter the UK market initially as a testing ground for this region, or is it easier to enter the EU market as a testing ground for this region?
That's a tricky one to answer. It does depend a lot on the type of product that you're selling and the demands. Okay, organic is one I know quite a bit about. The German market for organic is 4 to 5 times greater than the UK, for example. But the UK is showing, considerable, consistent growth in that category of product. So, arguably there's more trade happening in Germany, and the number of retailers that are specific to organic and the number of chains and the dominance there is quite different. So it's going to come down to that, and a real close look, and looking at the data between specific EU member states and targeting the right ones, and making an assessment. Language is on your side, of course, with the UK. That's always something that I think is favoured quite highly when it comes to selecting the UK. For Australian exporters. And I think, just touching back on the brand Australia thing, we see certain dominance with, the likes of wine, where, Australia is incredibly dominant. We import more wine by volume than from anywhere else in the world from Australia. So, so it really does. Are you going to latch on to pre-existing proof and look at that as your main vertical for selecting a market? Or you're going to be a bit more speculative and go, hey, there's an opportunity for my product in that particular state, territory, or country, and I should go there. I think it's a careful thing to do, and going to the trade shows and in the kind of territories that you're looking at is a very good idea, I think, and to make an assessment and to look at competitive comparisons of what's happening on the ground. You're going to see very different things in Germany than you'll see in the UK, and that's only going to come when you go there, have a look. experience it for yourself and make an assessment in person. I think that can be very, very important.
Yeah, just to add an example of that, Martin. I mean, I was at a trade show in Sweden not long ago, and there were hundreds of kombucha stands. I was at a natural product show. You don't see them in London anymore, or in the UK. That trend is much higher up than it is. So it's really product specific, and it's really, get involved, get to a trade show. As Martin said, it can be thoroughly insightful, actually.
Great. Thank you. So, assess the opportunity. It depends on the trends in the market. I think is a key takeaway here. So thank you for sharing that. Well, look, with that, we are coming to the end of our session today. I would like to really thank Tom and Martin for their time and their insights, not just today, but also over the course of the last, I don't know how many, 8 months, I think, that we've been partnering up on this together. As they mentioned, we delivered a series of 4 webinars. There's also a podcast series that's been developed to complement the content that's been rolling out through webinars. So thank you very much for working with us on this series. And we're looking forward to building on that with you in the coming months and coming up with some more topics that we can bring to Australian exporters. So please do fill out a survey that you will receive at the end of the session, because this is your chance to have a say and to tell us which topics would you like to hear more about, and help us plan these activities further. Austrade does run regular information sessions and briefing sessions for exporters on a wide range of topics, and we do encourage you to keep your eye out on Austrade website for these and through our newsletters, and you can register for any upcoming events through that page as well. There is a range of activities that we are consistently rolling out, and we are here to assist you. You can go to our website, lodge a request form, or talk to our advisory services to get answers to your initial questions. And then, as I mentioned, we have wonderful teams here in markets as well to help you on your expansion journey. So thank you for joining us. We really appreciate your time. Thank you again, Tom and Martin. And see you in the future sessions.